Hi, everyone. This is Jason Barack of Wall Street from Main Street. Welcome back to another Wall Street from Main Street podcast interview. Today's special guest, I am joined by a returning guest. He is co-founder, president, and CEO of Sandstorm Gold, Nolan Watson. Thank you for joining me again.
Thanks for having me.
Now, Nolan, it's been a really interesting last couple years in the gold market. How dangerous, in your opinion, is it to take on debt and do a bad deal in this gold price environment?
Well, it's certainly very dangerous to take on debt and do a bad deal in this gold price environment, but the degree of danger is directly proportional to the number of risk factors that can go wrong. So if you're an operator taking on debt who doesn't really know what your operating cost is going to be, or you're exposed to operating cost overruns, it's especially dangerous. And so that's why I think the entire sector is under pressure, including the majors, because of those debt levels. Streaming and royalty companies have less risk because they can control their costs of production, and often, and especially with royalties, you don't have any costs, so it's less risky, but still risky nonetheless.
Yeah, it's been a really interesting last 4 years. Like I said, I think let's talk a little bit about the gold miners from 2011 to today. I think in 2011, 2012, the gold miners didn't see how severe this correction was going to be, or they didn't see it at all. And it seems that they brought on a lot of higher cost projects, even as the gold price was starting to correct, I guess betting that the gold price would, it would just be a short little correction and continue to go higher. And they've seemed to me to be kind of reactive to the way that they've cut their costs. So it seems that they have cut their costs finally a lot in the last couple of years, as we've seen with their financials, but they've lost a lot of money, Nolan, all the way down, since 2011. And I don't know if you can tell me if I'm wrong on this. It seems every time that they've cut their costs a significant amount all the way down to the levels that they are now, it seems the metals price falls further, and they're always reactive and behind the cost-cutting curve.
Yeah, we're continuing to be in a declining commodity price environment, including gold, which is our business, and that has persisted for a number of years now. It can't persist forever because things aren't going to zero. But certainly one of the things that I think people underappreciate is the effect of currency, and particularly the strength of the U.S. dollar that's being experienced right now. So what you're seeing is the U.S. dollar gets stronger. A lot of companies that have operations outside of the U.S., so for example, if you have a mine here in Canada, your costs of production automatically go down because they're largely denominated in Canadian dollars. The Canadian dollar has dropped 25% against the U.S. dollar over the last couple of years, and so your cost of production go down. The gold price goes down denominated in the U.S. dollars, but the gold price hasn't really gone down that much compared to Canadian dollars, so it's still $1,500 an ounce Canadian. But where you're really seeing an issue, and this gets back to your first question about debt, is if you're a Canadian gold mining company that has seen the U.S. dollar-denominated gold price drop and your U.S. dollar-denominated cost drop, but you have borrowed money denominated in U.S. dollars, your debt has now just gone up relative to your margin. So in a decreasing commodity price environment, where you're really seeing the struggle is guys who have borrowed money in U.S. dollars, and that's really come back to hurt them. It's not entirely dissimilar to issues of a lot of developing countries that have a lot of U.S. dollar-denominated debt in sinking currencies.
Yeah, that's not good, where the commodity price goes down and then your debt burden in real terms goes up. That's like a double whammy then.
Exactly.
My next question for you has to do with Sandstorm Gold. And what lessons have you learned from the problems with deals with Luna Gold and Colossus Minerals? And how has your potential investment checklist improved based on the lessons you've learned?
I've been doing this for 12 years now and learned a lot of lessons over time on every deal, even the ones that went well. The issues with Colossus, I think, are well documented, and we've learned a number of things, including we changed out our entire technical team, and making sure that you have the best technical people in the world is something that is an absolute must for the highest paid person inside Sandstorm right now is our technical person, not the CEO. And we'll continue to do that. With Luna Gold, there have been different lessons, too numerous to discuss here, but one of the things that we pride ourselves in is being relatively good judges that when there are unforeseen challenges or decreasing commodity price environments or other challenges in the industry, that when we look at our partners, we've done a pretty good job at not throwing good money after bad and choosing which partners to help out. And so, for example, Colossus, we didn't throw further capital at it, but Luna, we recently did and had a full restructuring. And now, although a lot of the information isn't public yet, Luna's actually doing well. They've got cash on hand. They're positive working capital. They're making good progress. They're one of the only companies right now that's actively drilling to do a new feasibility study, and they're moving the asset back in the right direction. So we're very pleased with how things are going there in the last 3 months. And I think that's a good example of the level of discretion and level of discipline that we've had to learn at Sandstorm over the last several years. So we'll continue to learn things over the next 10 years as well. Our goal is to keep getting better.
Yeah, a lot of people, regular quarterbacks on Wall Street, regular analysts have tended to blame, you and Sandstorm Gold people for the problems at Luna Gold, but they had operational problems. They seem to be they could have raised a lot more capital than they actually did in 2010, 2011, a higher gold price. There was mismanagement problem at that gold mining company as well as many others. So I don't think it's fair for them to, blame so much of you guys for having, such a large gold stream on there. I mean, Luna needed the capital, and you guys it was a low-cost mine at one point, right? And it was making good money for quite a while until, these operational problems and the gold price dropped and things like that. So I think it's just unfair that a lot of people out there have blamed the problems for Luna Gold on you guys when I almost never hear Luna Gold management blamed for the problems that the company has had there.
Yeah, well, they've had 5 CEOs in 5 years, so the first 4 got blamed.
Well, not by the articles that I've read from other stock analysts. So maybe by some of the shareholders, yes, but not by people who analyze their company.
Yeah.
So
That's fair enough. One of the things that we've learned and we understand well at Sandstorm is when you're in the streaming and royalty business, all that you can do is control your investment decision-making process. And we made a decision at a point in time to invest in Luna. We've made money on our investment. I think most people think it was a mistake and we ended up losing money, but if you actually track how much cash we've gotten back versus how much we invested in the original stream plus the equity we invested, we have made a profit, and we still, through the restructuring, have taken back a large royalty on their project, a royalty on their exploration projects, a large stake in their company, and a loan due back to us. So all of that is additional profit over and above the profit we've already made. So the original investment decision was a good one.
Very good. And yeah, you built that company on the Luna Gold Stream. You took a lot of risk in 2009 when other people necessarily wouldn't have done that, and it paid off. And what you also didn't mention is you reinvested those profits into other deals. So I don't hear some of your critics of the Sandstorm Gold and yourself mention those things, that you've been able to reinvest those profits into other deals. I have another question for you. The 2 major criticisms that I read when I read negative articles about Sandstorm Gold, because I like to challenge my thesis that you guys are a well-run company and that you guys have a great business model, great management. The 2 major criticisms of Sandstorm Gold were that the company took on too much counterparty risk with smaller miners, and the revenues of the company weren't diversified enough. Do you think you have solved these problems?
Well, we're continuing to solve them. I think we've made a tremendous amount of progress over the last 4 years. I think you have to remember the company was launched at the beginning of 2009. We had two good years, and then it's been 4.5 years of downward spiral in the commodity price environment. So what were strong counterparties 4 years ago have become weaker counterparties in some instances today. But even companies like Vetnor, for example, where people are worried about our counterparty strength, we've made money on that transaction, and it's been a good one for us, even though they've had a lack of liquidity over the past couple of years. And so I think we've done, on average, a pretty good job at picking reasonable mines and reasonable counterparties. Over the last couple of years, we have focused significantly on both diversification and on increasing the counterparty strength. And so people would probably be surprised if they actually dug into the guts of Sandstorm today and realized in the last 4 years we've taken ourselves from a company that has maybe 8 streams and royalties, all with junior mining companies, to today we have over 70 streams and royalties, and more than half of our cash flow comes from majors and mid-tiers. And so that hasn't happened by mistake. We've been very diligent in trying to accomplish that, and we'll continue to head in that direction.
Very good. And you guys also have, I think, around $38 million in annualized operating cash flow, right, as of the last quarterly announcement. So that cash flow is unencumbered. There's no real maintenance capex, right? So that's almost all pure free cash flow. And you guys are trading, the shares are trading at a very low free cash flow multiple compared to other royalty and streaming companies and many other companies that are generating free cash flow on many other exchanges.
Yeah, if you take our enterprise value and you back out our cash and you back out loans that we've made to other companies and the money's due back to us, and if you back out our portfolio of equity investments, even at today's equity values, which are admittedly less than what they were a year ago, you've got probably $100 million of non-core assets there on a $300 million market cap. So there's $200 million remaining value associated with $30 million a year of free cash flow, which is a lot lower than you'd see for an unlevered royalty or streaming company.
My next question has to do with finding potential deals. How difficult is it to find low-cost gold mines to invest in this environment?
Candidly, it's very difficult. The industry is littered with companies with high-cost operations relative to today's gold price. And that is something that we're focused on. So the number of times that we have to say no to someone looking for capital from us because they're producing gold at $1,100 an ounce, and we don't want to take the risk that the gold price goes lower and they have to shut their operation down, is a story that repeats itself quite frequently. So we're very diligent to weed those ones out, and that's what our job is to continually look for opportunities that we think have good upside but have lower downside risk than the average investment, and we're continuing to execute that plan.
Yeah, when I speak to other value investors about Sandstorm Gold, they assume that the gold miners have low costs because they either look at cash costs or they see the costs that the miners have put out now. But they don't understand that, like I said earlier in the interview, the miners for the last 4 years have lost a lot of money all the way down and the debt levels they have. And I tell them, a lot of these mining companies, they have so much debt and they've cut their costs. But, if the gold price went lower, I don't know how much more costs they can cut without shutting down a certain amount of their mines or putting mines on care and maintenance and stuff. In your opinion, why isn't the mining industry consistently profitable then, even in bear markets?
Well, and I have to be careful what I say because we sign a lot of confidentiality agreements and have done a lot of due diligence on a lot of companies and assets for which we haven't done deals. But one thing that we see quite frequently is as the gold price has dropped off, people's costs have come down. Part of it's related to currency, but a lot of the reason that other people's costs have come down or companies' costs have come down is because to a certain extent they are either A, high grading their deposit, therefore selling their future short, or B, they are under-investing in the sustaining capital and significantly decreasing their mine lives as a result of it. And I don't think the average investor fully appreciates that. So if the gold price continues to stay this low, I think you're going to see a lot of even mid-tier companies unable to service their debt because they won't be able to continue to run their mines with such low sustaining capital amounts. And it really is a significant problem in the industry.
I completely agree. I've listened to interviews from Keith Barron, if you're familiar with him, and he's gone and visited a lot of mines. He's built mines. He's found gold mines. And he was saying, I think back in 2011, 2012, the miners had started high grading back then. And he was like, they're saving themselves now, but long term, they're ruining the mining plans in the mine where maybe this mine was supposed to be a fairly low cost mine for 10, 15, 20 years. But if you start high grading it, you're violating the mining plan, and then the mine's not going to be a low cost mine going forward then in the future.
That's exactly right. And I don't fault them, though, because having said that, these companies that have taken on a tremendous amount of debt, they have to attempt to save themselves and attempt to stay alive for better times. And I do believe that there will be better times. The question is when and can they stay alive till then?
Well said. Are you proud that a number of the junior miners you have done streams with have been bought by larger, more established and respected miners in the industry?
Well, that's the goal. The goal is to identify things that the market doesn't see yet or the market doesn't get yet, and to find companies that have assets that will be attractive to mid-tiers and majors in the future. And so, Silvercrest is in the process of being bought by First Majestic, and Brigus recently, which is one of our counterparties, got bought by Primero, and we've had a number of other partners purchased, and we actually, behind the scenes, have other current partners that are in conversations with people. So it's a theme that we think our average counterparty qualities can continue to naturally increase in strength as that effect continues to take hold, and as we buy new streams and royalties, on average it'll be with higher quality counterparties. So we are encouraged from that.
Very nice. Now, we recently saw Royal Gold do a major streaming agreement with Barrick Gold because Barrick needed the cash to help with its balance sheet and its enormous debt levels. How dangerous, then, is it for a company to use massive amounts of debt to try and build mines in this environment?
Well, there's no shortage of examples of how it can work out for some people. And it's very, very dangerous in the sense that when you're building a mine, it is a very normal occurrence to overrun on your capital expenditures and to overrun on your working capital and to have your production delayed. And so if you are planning on paying off your debt with the cash flow you think you're going to get when you look at your Excel spreadsheet, a lot of that cash flow is not going to be there for the next couple of years, and you'll probably actually have net cash outflows. And so if you don't have enough financial flexibility while you're going and building that mine with debt, the banks are going to end up owning that mine at the end of the day and liquidating them off. We at Sandstorm get phone calls in this environment probably on every 2-week basis from receivers who are liquidating mines. Then those receivers have been hired by banks who have seized security of the assets from mining companies. So it's happening fast and furious.
Yeah, that's exactly kind of what I think happened there. I think, Barrick was almost in breach of their debt covenant in 2013. I haven't looked at their financials recently, but, once you're in breach of your debt covenant, Nolan, you don't have that much of an option, right? The board of directors, the bankers, the creditors come in and tell you, what you have to sell to pay them off, right?
Yeah. Now, fortunately, a lot of the majors have at least been smart enough to structure their debt with long-term tenures and not large lines of credit, which when you have multi-billions of dollars worth of lines of credit, banks tend to get nervous because it can impair their balance sheet, but at least their debt is a problem that isn't going to come home to roost for some of the majors for a few years yet. But some of the smaller, more mid-tier companies, they've got issues because they borrowed money from banks who have the ability to call those loans. And so if you're an investor in a mining company that has debt, one thing that's important to remember is that not all debt is created equal, and not all debt is equal risk in terms of it being called and them seizing security. So it's very important to understand what type of debt, who has lent the company the money, what are the terms on which that bank can call that loan, because that is the key risk of investing in a mining company right now with that.
Yeah, I completely agree. Are there deals out there for Sandstorm Gold out there similar to the deal Royal Gold did with Bear Gold?
Well, we're a smaller company, so obviously we're not going to do a stream that size, but I do think that there are deals out there of smaller size that have not entirely dissimilar characteristics that we'll be able to take advantage of over the next year, or at least that's our hope.
Very nice. Yeah, I think you guys have to be careful with counterparty risk, but I think you guys have done a good job of changing that in the last 2 years or so to focusing on counterparty risk more than in the past. My next question for you is, how bad are things in Vancouver, Canada for the junior explorers right now? Is there any capital available for exploration or to build mines? I mean, I've heard stories that there some of these juniors have changed their shell companies and, they're selling eggs or marijuana and funny things like that now.
And the answer to whether or not there's cash available to junior exploration companies, I would say the answer is no to 99.9%. There will always be an exception for some reason or another, but broadly, no. And yes, there are a number of Vancouver-based mining companies that are now marijuana publicly traded companies. So
I guess they're doing what they have to do to survive. My next few questions have to do with actually Sandstorm Gold itself. The Mongolian government seems to want the underground expansion to occur at the Oyu Tolgoi mine in the near future and has reached an agreement with Rio Tinto recently. Is this good news for the Entrée Gold Stream?
Oh, of course it is. It's that portion of the mine is on the piece of land that would be mined from the underground, and therefore the underground has to go forward for us to be able to collect on our royalties. So something we've been watching closely is the progress that's been made between the Mongolian government and Rio Tinto. We're glad to see them working together, and this looks like the first time in potentially 10 years that Rio Tinto and the Mongolian government are actively working together with a sense of urgency. I think part of the reason for that is that you're seeing Mongolia's direct foreign investment plunge dramatically. Their economy is taking a big hit, and so is their government's fiscal balances, and they're having to take a serious look at how to get foreign investment back into Mongolia. And they're taking it seriously, and we're benefiting from it, so we're very pleased.
Yeah, the low copper price is hurting a lot of people. A lot of the mainstream people didn't see that coming. I know Goldman Sachs has been saying there's a copper shortage, but most of the copper demand, it seems to me, a lot of it was based out of China, I think over 50%. And, a lot of it was on central planning. So they pulled the demand forward for many, many decades with their stimulus projects for these infrastructure projects in China.
Yeah, exactly.
Now, my next question has to actually do with low copper prices. How do you think low copper and base metal prices will affect silver and gold mining supply then?
Well, certainly in copper, there's the lower prices, although partially related to the strength of the U.S. dollar, is also partially related to a supply side issue. While you've got the world economy not quite as strong as it was in China pulling back, so more copper is being produced than is necessarily needed, and copper inventories, although are somewhat flat, they're certainly not declining these days. And so because so much precious metals are produced as a byproduct, particularly silver, of copper production and of other base metal production, in order for copper prices and other base metal prices to normalize, you're going to need supply side cuts through mine closures, and when those mines are closed, you're going to see a corresponding drop in the precious metal byproduct supply. So low copper prices will decrease the amount of gold and silver that's produced.
Yeah, I agree. I don't think a lot of people see that coming in the market. They say, oh, there's plenty of gold and silver available, but these low copper prices, these copper miners were massively over leveraged with debt, and they hedged their copper price at a much higher price for only a couple of years. When those hedges come off, that debt's going to be onerous. I don't know if these copper miners are going to be able to raise capital and pay off the debt and keep these marginal copper mines running that produce gold and silver as a byproduct.
Well, it's a consistent theme right now, and it's not just happening to gold companies, it's not just happening to copper companies, it's basically happening to anyone in the commodity industry. And even multi-asset diversified producers like Glencore have had to come out over the last week to state a articulated plan to pay down $10 billion of debt over the next year and a half, because they are sitting with $30 billion of debt, and their investors are concerned that they're not going to be able to pay it off. And so you've got the same issue with zinc, you've got the same issue with lead, you've got the same issue with iron ore, coal, so on and so forth. So it's a pervasive issue.
Yeah, I completely agree. I don't know how much longer this can last before we see a lot of mines shut down and bankruptcies and things like that. We're going to have supply problems in the near future if the commodity prices don't start to rise again.
I was saying that the nice thing about supply cycles is that they always tend to balance themselves in the long term. They can be disproportionate in the short term, but low prices will cut supply, and when supply is low, you'll end up in the future getting higher prices to incentivize an increase in supply, and it's going to repeat itself every so often for the next 1,000 years.
Yeah, I think a lot of people don't understand that about supply and demand. I hear a lot of people, on technical analysis on Wall Street and CNBC and Bloomberg and BNN saying, oh, oil is going to go to 20. I really don't know any oil producers that can produce oil at 20. Even the Saudis would struggle at 20. So I don't know how long it would stay there if it went there. But people don't seem to understand, that really, production costs count in a market, and that, eventually all the producers are going to go bankrupt if they can't make a profit, and there's going to be supply problems then.
Yeah, so it's not well understood. I agree.
My next question for you is about the shelf that you guys filed. What do you think that shelf's going to be used for if you actually do use it?
Well, we, as publicly stated, we have no specific plan to currently use that, but one thing that we have decided at our board level is that we believe it's prudent to always, A, have a shelf, and B, have a normal course issuer bid. And if you're allocating and using capital properly, when there are opportunities in front of you that are accretive and you issue equity to take advantage of those, or if your share price is cheaper than what you can reasonably buy other assets at, you should be buying back shares instead of issuing shares. And so There are times to do nothing, there are times to issue shares, and there are times to buy back shares, and we want to run our business acknowledging that all three of those are options at all times.
I completely agree. Ideally, in the future, I'd like to see Sandstorm Gold have a lot of free cash flow, be well diversified, pay out a dividend, and then when your stock price is cheap, buy back shares. So in a perfect world, that's what we would like to see. That's a textbook definition of a free cash flow generating company that can grow without debt, I guess.
Absolutely.
Now, my next question is about Aurico Metals. I guess publicly you have 12% of the company, but we've seen Canadian Insider that you've continued to buy shares. Are you guys now the largest shareholder of Aurico Metals?
I don't know for sure. We publicly have stated that we own 12%. We still have around close to 12%, I think slightly under. So no major changes there since publicly stated activities.
Okay, great. And my next question is about your Bitgold position. Bitgold's done pretty well. Do you still have your Bitgold shares, and do you plan on keeping them?
We still own Bitgold shares. We'll always keep some Bitgold shares, I think, just because we are passionate about their business, and qualitatively we're passionate about what they're trying to do and how they're trying to influence and improve the gold space and the way gold is used as money. So we're big fans of theirs.
Very good. I have two more questions for you about Sandstorm Gold, and then I'll let you go. What are the goals for Sandstorm Gold for the rest of 2015 and the next 12 months?
Well, for 2015, we're winding down here. I've got a few months left at the end of the year. We're working on a few deals, more on the small side, so we'll probably do a couple of small transactions. We'll probably continue to accumulate cash flow and continue to just run our business as is and keep trying to find good opportunities for us to grow. We do have some larger things in the pipeline, although it's never certain as to when any of those are going to land or whether you'll be able to agree with the counterparty. So we'll see how that comes. Our goal over the next couple of years is to increase the size of our business and to increase our cash flow and continue to increase our average counterparty strength and increase our diversification. So really when you look out, I know this is not your question, but when you look out 10 years from now, what we want to be is a significant, stable, diversified streaming and royalty company with strong counterparties on good assets and giving our investors above average return with below average risk in the gold space. And that's our objective. That's what we're trying to accomplish. And each year you're just going to see us attempt to take one step towards that.
Yeah, and I mean, as long as you keep a good amount of cash in the balance sheet, I think the dangerous thing that most companies are doing, and we saw this with Silver Wheaton, is the debt. Silver Wheaton, I guess, tried to time the gold and silver markets in 2013, and they have obviously an enormous amount of operating cash flow and free cash flow. But I guess they tried to time the gold and silver markets that thought 2013 was the bottom. They took on a massive amount of debt and did those big deals with Vale, and it wasn't the bottom. And then, the debt now, they've been focusing very hard on paying off the debt, and they've had these other problems. But a lot of the problems have been because of the debt, I guess.
Well, I would even slightly disagree with that in the sense that I think the issue is that the silver price has been hit really, really hard, and they've had these issues with the CRA on top of that. I think most people are fairly unconcerned about the debt at this level in the sense that it could be paid off with free cash flow in just a few years, and Silver Wheaton's cash flow is pretty strong, pretty safe, pretty stable cash flow. So I think at these debt levels, people aren't concerned too much. Certainly if they went out and borrowed more money to grow their business, I think that would begin to become a concern, but I don't think that's their plan.
Okay, and I forgot to ask on the Oyu Tolgoi mine, do you think then that's still on track then for 2019, 2020, or do you think the timeline's been pushed back? Because it seems with this good news then that maybe, it might get back on track.
Certainly there has been some time that's been lost just while they've been sitting there and doing nothing for a couple of years. So I think you will see the original timeline get pushed back, but we are keen and eager to see what their revised timelines are, and so we'll wait for those when they come out with them.
Okay, very good. And my last question for you then is about, are you worried then about a potential hostile takeover attempt of Sandstorm Gold from a larger royalty and streaming company since you guys have such a low valuation right now in this market?
I wouldn't say I'm concerned about it in the sense that if someone wants to pay a lot of money to our shareholders for our business, then they don't need to go hostile. They can. We're reasonable people. We're not the normal management of mining companies who have no ownership in the business. I have a significant personal stake, and I will not attempt to block things just to protect my job. So it's not something I worry about.
very interesting. Yeah, I mean, it's been a very ridiculously difficult thing to deal with in this bear market here. We haven't seen quite as many bankruptcies as I thought we saw, but the gold miners in general, are a lot of them currently profitable, or are they still struggling mightily to cut more costs?
No, most of them are not profitable. They'll either show net profit or show positive cash flow from operations, but when you look at the sustaining capital, you just look up the financial statements of any company you've invested in. You can look at their operating cash flow and then back out the investing cash flow, which is effectively where the sustaining capital goes, and more than 50% of that time that number is negative.
Yeah, so it's a dangerous environment to do deals. I mean, I hear people saying, oh, these guys should do a lot more deals, but I mean, when the counterparty risk is there, you got to be really careful if you do too large a deal and take on debt and things like that.
Yeah, we're very selective right now on quality of assets.
Great. Well, please tell our listeners more about Sandstorm Gold and your website and about how they can buy shares.
So we are listed on the NYSE market under the ticker SAND, SAND. And they can find us on our website at sandstormgold.com.
Great. Well, thank you again for your time, Nolan, and for telling our listeners more about the gold mining industry right now. It sounds very treacherous right now.
It is, but for the brave who are willing to invest and make smart decisions, I think that there are way better days to come, and they'll be rewarded. So that's what we're trying to do with our business anyway.
Crisis does breed opportunity.
Yes.
Okay, well, thanks again for your time. I appreciate it.
Thank you.